Morning, traders. Welcome to the TraderLab. I'm your host, Tom B. Thanks for visiting. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time, and this stream's about integrating Bookmap order flow tools with auction market theory using the volume profile as a chassis in the intraday developing time frame. It's based on structured trades that are available to everyone in the Bookmap Discord TraderLab community. And the TraderLab is a community of like-minded traders who've come together to leverage their collective experience. It's about understanding the business of trading and understanding how the market works, why it does what it does, and how at times you can get in alignment with it with structured trades. In other words, trade plan. Trading is not a video game. It's not about making it up as you go. That's gambling, and it's fine, except I would suspect that longevity is not something that would be in a trader's future if they approach the business that way. So if you've been doing your thing, and let's just say, in spite of winning trades and you're not getting a positive outcome or the potential for sustainability in creating a sustainable business, then you might want to visit TraderLab, and there's no cost for that. And like everything, you have to do the work. There is no plug and play in trading. It would be so nice, wouldn't it? It doesn't exist. So instead of trying to do that, maybe the thing to do is learn market mechanics and then actually craft something based on the trades or my work and other traders' work that happens in TraderLab, and then find what speaks to you. We cannot do plug and play. We cannot replicate, in my opinion, what other traders do, but we can learn from them. You can't do what I do, and I certainly can't do what you do, even if you have a process that works better than mine. It's not what's better. It's what can you execute that gives you an edge, and it doesn't matter how you achieve it. What does matter is, can you execute it, and does it have an edge? And that's what the TraderLab is built on, helping traders understand the business that they're attempting to be in, not the fantasy. And I'm going to say there's quite a gap between what we think the business is and what it actually is. And if you're interested in finding out why most retail traders don't have longevity, then you might want to take advantage of this opportunity to visit the TraderLab. And there is a link in the bottom of YouTube if you're inclined, and there is no cost. And thanks again for visiting the lab today. General disclosure. All Bookmap Ltd. materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendation. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this is not a trade calling room, but if we get into real time, we'll certainly discuss the market. By the way, yesterday I did a special presentation, and it was for Bookmap participants, Discord participants. It was exclusively for them on how to use the heat map. And hopefully Bookmap will eventually release it, but it was specifically for Discord participants. Now, I want you to understand something. Anyone can come to the Bookmap Discord community, and there's a lot of streaming, a lot of education. There is no cost for it. But you might say the door to come in to the Bookmap server and get all this additional education, order flow, stocks, options, crypto, etc. Different streamers, different approaches. There's not one way to trade, but I can suggest if you can't create an edge, it doesn't matter what you're doing. But just a personal opinion. But that's available to all of you. So there are special events that take place. You don't have to be a Bookmap subscriber, but to use the link in the bottom of YouTube if you're not in the Bookmap server. And all you need to do is confirm your Discord username and basically your email, so you can get a code so you confirm that you're not in the spam materia. And you guys can all appreciate that, right? Who needs the noise? So let's move on. What I like to do is start and discuss the condition of the market. And I'm going to discuss my plan for today and not having it work initially. So, and that's fine, because, and you'll see how I manage that, because I post in TraderLab, hey, here's what's going on. Here's what I'm looking to do. Who knows? And if you think you know, It's very important to know you don't know, but to know how to define change. This is the thing. As day traders, we're not in the business of predicting. We're in the business of anticipating. Speaking of anticipating, 4th of July sale. If you've ever wanted to try Bookmap, I have to point this out to you because it expires July 11th, and this is 2025. 50% off Global Plus and data. So if you're a new subscriber, if you're an existing subscriber, go check this out. Go to bookmap.com. So there's all I have to say. And the other thing is, in TraderLab, there's 60 PDFs of these structured trades that I refer to. They are not plug and play. The purpose of TraderLab is to give you ideas that you can dig into and make them your own. This is not plug and play. And I have to stress that because you will see me do things, of course, or other traders, and you'll see them work, and you'll see everybody take stops, by the way. So if you're thinking you can avoid risk, that doesn't happen. And if you think you can avoid paying the other side, that doesn't happen. Casinos who only trade, or should say, play games with an edge, they seem to do pretty well. And yet they do pay the gamblers. How do they experience it? How about overhead and cost of production? We are emotionally charged, and we, I'm just trying to get, I got a short sitting in here. I'm trying to get it. Come on. Ever cheer for the other side? For your, I should say, for you, I cheer. Doesn't do me much good, but might as well. Anyway, this is the RTH Open. Now, I got to point a couple of things out to you. First of all, I got to show you some levels. Let me turn something off here that's throwing current levels on. I want to get them off the chart. We can put them back on later. I'm using Investor RT as my higher time frame platform. It exports levels that automatically that you will see. Let me try to get some things back here. One moment. Okay. Yeah, these levels here are current, and these LVNs, low volume nodes. So these are all current. They're going to disappear. Now, let's look at the financial food chain. Now, yesterday we had an inside day, and an inside day is compression or balance. The market is not facilitating trade in this compression. And a neutral day, really, it was just short time frame traders like us. The higher time frame, not active. Okay. Now, some of us may think that we're in a quote bull market. Subject to time frame, yeah, we are. But as day traders, that's not so material to us as the shorter term participation and who's controlling the market in the short term or rotations. And that's why when I say when you create trade plans, you got to find your groove. You know, some traders put a trade on and go into Barca Lounger. Other traders are going to trade very actively. Now, I have a personal preference, but it doesn't mean it's the right thing for you. A personal preference for me is I trade larger swings because of a thing called risk reward, you know. If I'm risking, let's say 3 points per contract, I'm not trading for 2 points or 3 points. I'm looking to trade a bigger rotation. Now, of course, you know, it's a double-edged sword. So trade management, understanding market mechanics, and accepting the random outcome of any interaction is part of this business. We are seeking certainty in an environment where it doesn't exist. And that's why you guys and me also early on in my development, and don't forget I started in 1980, so it was very much classical bar charting. We didn't have candles at that point or any of this, you know, and it was very much indicators were new. So I spent a lot of time, you know, trying to get certainty, you know, and classical bar charting, just so you know, is measured moves. So I learned that at the CME, and I said, well, okay, where's it going to go? And I started with this idea that, well, here's a pennant, it's going to go there. Here's a head and shoulders, measured move, it's going to go there. Then I got really brilliant. I said, oh, look at Fibonacci. It's going to do this. Well, I went down the road of what the market will do as opposed to what the market might do. And there's a huge difference between maybe and certainty. So most of us go on the quest for certainty. Part of that is created by our psychological need to avoid risk. Isn't it logical? So, and you can learn all about this in TraderLab. I'm not going to spend any more time on it, but if that's you, we've all walked in your shoes. And if you're working hard, curve fitting, tweaking, tuning, we've all done it. But you're still not moving the ball forward in spite of winning trades. Maybe it's not about getting more winning trades. Maybe it's a defective process, and you're always going to wake up in the same place. If that's you, it's all of us. The difference is, are you going to keep doing it, or are you going to go, wait a minute, how long am I going to keep doing something and I keep coming back to the same place? That, in my opinion, should be the timeout signal. And then come to TraderLab if you want to find out some other options for you in your journey. Up to you. But you have an open invitation and there is no cost. So TraderLab's not going to be here indefinitely. I'm not going to be keeping doing this. I'm a full-time trader, and when I stream, I'm not trading. So, something to think about. Anyway, let's take a look at the RTH open. Now, remember, I was going to give you levels. I'm sorry. This is called a single. When we had that big up day, this is a low volume area. The market can come back and check. So that's one piece. This is the naked volume point of control from that last day where we made the all-time high. This was where the highest volume was. That's a potential target. Okay? This was a high. I hope this is in the right place. 10. Let me just look here. Yeah. Okay. This is the day after the sell-off from all-time high. This was the high of the day, so there's buy stops. So once we got rolling to the upside, then the possibility, hold on, I got to check something. Okay. The possibility was to come here, here, here. So those become upside targets. Not initially. Then we have the ETH volume point of control. The volume point of control is the highest volume from the ETH. And let's move down the financial food chain a little bit. So think of these like retail. We have yesterday's high. What's there? Stops. Okay. And then we have the current low. That's not important. But, and then down here. The targets I have for the day, and not a recommendation, we never have to get there, this is trading, is this. So the pot, and this is the retail price from yesterday, the highest volume, and this in the intermediate time frame is also the highest volume. Now, when we talk time frames, think Matryoshka dolls. It's a vertical integration of rotations. So, you look at the daily, quote, time frame, RTH, you see, intermediate time frame, let's call it that. I mean, not looking at weeklies, it doesn't matter really, because even if you're using daily candles, a swing high is going to show up, whether it's the weekly high or just a rotational high. They all end up in the same place. So I'm just giving you a personal thing. I'm a day trader. So I don't want to zoom out too far because I'm trading fractals or rotation. So now, very exciting. Let's go a little further. So this is the RTH open. And by the way, if you have questions, post them. I'll do my best. If I can't get to your questions, use the link in the bottom of YouTube. If you're visiting, come to TraderLab. There's no cost. You can post them in there. And basically, it is a community of traders that have come together to leverage their collective experience. Our senior trader has over 50 years that he admits to. And when he's not on the golf course, I've been trading 46 years, both professionally and out here with you. And there's no crystal ball, because I think we all would have, if we could have found a crystal ball, we would have done it. When I was on a trade desk, we had a magic 8-ball. And that didn't work out so well either. So what does that tell you? The best you have is maybe. Now, so the probabilities are the following. And I want to give you this because initially I was thinking we have shorts in the market and we were in balance yesterday. So two-sided trade, an inside day. When you have an inside day, what does it tell you? It's compression, and it can break out and squeeze. So I was looking for the market to open, go higher, and then I was going to fade it and come back down, and I was looking for it to come back in the range, come down here. So that was my plan. I post this in TraderLab, and whatever happens, happens. And then going for this and this. So my plan for was open, higher, fade, because I was thinking, well, we'll squeeze shorts out, and then maybe, and that's all you got in this, we're going to return back to balance, and that would be here. So that was my plan. I'm sticking to it until it doesn't work. And let me show you. Now, so we're opening above yesterday's high, so that's a gap. So we're opening higher, out of range and out of value. Value is 70% of the volume. And yesterday was what we'd say an inside day. So it's like a spring, a coil, if you guys know what those are. And it's really it's just a compression. And whoever's offsides gets thrown under the bus. So again, my plan was the shorts get squeezed and then I fade. That's called responsive selling. So here's the plan. If the market opens out of range in a gap, what does it tell me? The market is out of balance. Is the market responsive? That means sellers take advantage of the higher price and we fade it to come back into yesterday's range. Again, that's my plan. So is the market, so if it is responsive, what do? We're anticipating two-sided trading, and possibly we'll come back down. So I'm anticipating up, down. Okay. So, but I'm also aware we're opening in a gap. Now, I have an advanced process I've shared, and these again are not mechanical. And I want to say to everybody who's listening to me or anybody else that you cannot replicate what someone else does. Also, when you see the influencers and, all that happy talk out there, most of it is just noise, and it is, well, it's for you to determine what it is for you. I used to subscribe many years ago to the idea, well, at least I got something out of it. Well, looking back, what I got out of it was wasted a lot of time because I didn't understand the business I was in. And this is going back, over 40 years. So anyway, sweep. This is called developing volume point of control. Now, I made up a term called VPOC migration. What is this? Well, what it is, and I didn't give you statistics. They're available in TraderLab. There are probabilities of what might happen, ETH high has over 90% probability. Now we're opening here. What are you going to do with that? ETH, volume point of control, has about an 80% probability-ish. Past performance not indicative of future results. ETH high, 79%. Overnight mid, 68%. Previous high, this, 67%. Taking out the first hour's high, 62%. Taking out the first hour's low, 58%. And it starts going down. Previous point of control, 38%. And yet that's a target. So I have these, but the context, which I'm looking for, again, up, down, is up. So I'm waiting. I'm going, okay. Now, this is called VPOC migration. So early on, I am looking again for shorts, but I have to have, what do we call that? You guys call them setups. Me, I call them structured trades because it depends on structure. Now, maybe it's semantic, but there's more to it. It isn't just mechanical. So what does this say? Let's talk about language. The market, the auction, if you will, volume profile, auction market theory is really what is the market at its most basic definition. It is a price discovery mechanism. And what the auction is about is the same as you shopping. So let's just keep it what it is. What do shoppers do? They buy on sale and they refuse to pay if price is too high. If the sellers want to sell the product, they've got to lower the price to entice the buyer, right? And if so, there might be let's just say hypothetically, there's a buyer here. but this is too high, and my sellers are sitting over here, maybe. So let's just say if this is too high, we can come back to the retail price, which is the yellow line. What makes a retail price? Now, when I use the term retail, I'm talking high volume. If you're buying a bottle of mustard in a supermarket, where most of the volume is retail. If the price gets too high, you'll either select another brand or that seller has to lower the price to entice. If it goes on sale, for whatever reason, the buyers, when they perceive the price is low and advantageous to them, they will buy the inventory. And then the limit side, the passive side, as the buyers gobble up the sellers, the buyers then who are crossing over, because you got two participants, you have a aggressor and a passive side, those passive sellers are being absorbed or pulling. And that means aggressive buyers have to keep paying up. So that makes the price go up. So here we have aggressors, okay? So let's just, if you get that concept, so that's the pricing mechanism. Now let's look at how it presents itself. This developing volume point of control starts at zero volume at the RTH open. What it tells us is potentially, and I'm only going to say maybe because that's the best you have in a random environment. What it does is, checking my position here, hold on, okay. What it tells us is, as high volume is retail, right, in your store, that when it moves up, this is too low. So I'm going to mark it. I made up terms for this. I call it a variable high volume node. I started doing this a long time ago. And this is not, at least what I started doing it, and I learned market profile, I think in 1985. It was from Peter Stottlemyre, and he created it. And it was TPOs. We had no volume. It was 30-minute brackets or bars, if you want to think of them that way, but it was a 30-minute thing. So we didn't have volume. It was time-based. But I started observing behavior in it, even back then, and I was trying to figure out, what does this mean? So when this shifted, even back in the Stone Age, before we had the internet, before we had PCs, we had nada. I think my first computer, and I don't remember when I got it, was an Apple IIe, and I started doing analysis on an Apple IIe. Very robust. I think about it now, and I'm wondering, what the heck? How'd you manage that? So this is called VPOC migration. What it is telling us is this is too low at the moment. The volume is here. You notice how the market chop, chop, chop. That's a consolidation. Now the high volume is here, retail price. The market moves away from it. Now there's more volume up here, retail price, too low. Shopping. The sellers won't sell it to you. Now the new price. You want to buy S&Ps, buddy? Get your wallet out. And what happens? Watch. Now this gets very dynamic. This is where the sellers were. I'm going to mix a little order flow. And in the heat map. The heat map, this is the historical heat map. So it shows us what happened. And what's important about it is, depending on the behavior, it might set up, we might use this as support. Why? The sellers were here. I'm just giving you a little sense, confluence. The buyers, notice the aggression. The icebergs were selling. That's them. And what happens to them? Thanks. And now where's my support? And what happens? VPOC migration. What's the language of the market? Too low. These guys sold. Sorry, Charlie. Remember Charlie the tuna? This now becomes potential support. 1,000 icebergs. VPOC migration. What's going on here? And I'm thinking, no shorts, Tom. Maybe you should be thinking about longs. Okay. So it's not doing what my initial plan. And that's okay. What this does for me right here, and I did not get long here, all right? Right Here was my long, and my stop went under. Pull back. VPOC migration. What is the language telling us? Everyone all together? Too low. What I'm doing is I am narrating the language of the market. I don't use indicators. Now, if you think order flow is an indicator, you can call it whatever you want. It's not. It is just giving us information. You need to learn to interpret the language of the market. So in the TraderLab, it's about learning a foreign language. And yes, it is foreign. And it is different than anything you've ever done before. If you've ever tried to play a musical instrument or learn a foreign language, you're looking at it right here. So most of us use indicators, and I have nothing against them, except we kind of lean on the indicators to do all the work and the thinking. Maybe if that's what most traders, developing traders, do, and they don't understand market mechanics, because it is not generic. The market condition right now is not yesterday. So when you try to solve and put the market in a structured box and it's behaving a certain way, in the TraderLab, you would have a plan for this specific condition. And right now, this thing is driving higher. And that means longs only, no shorts. Except I have targets, right? So everything here is saying long, 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 have a great time. So long, long, long. Let's watch. This is a high at 63.10. That was the sell day after the all-time high. What's above here? Buy stops. Buy stops. So this is, I call this fuel. Now I understand, of course, what might happen. And just like you, I can't predict anything. So I'm not in the prediction business. Remember, I'm in the alignment business, and I think you might want to think of it too. This is not a business of being right. This is a business of edge. So where does your edge show up? And to determine edge, you actually have to do work. And the work is not tuning and tweaking indicators. Anybody can do that. Most retail traders do it, and most retail traders have no sustainability in spite of winning trades. So maybe we got to approach this in a different way. What is a successful business model? It's gaming, casinos. They only play games with an edge. Okay, and they still pay to gamblers. Very exciting. But they don't get depressed. They just play the games with an edge. They don't change the games. They don't skip the next hand. They're not emotionally attached to the outcome. But we are. So where's my potential? Now, fuel is here. I call it fuel. Buy stops. They become buyers. So you can see what's happening here is this is buy stops, selling icebergs. I'm seeing the icebergs selling, going up, and I'm saying, that's interesting. And that's all I can tell you about it. That's interesting. I get a buy sweep here. And look at the icebergs are selling. There's a lot of selling here, but the market's still going higher. And I am, as they say, perplexed. And I'm going, wow, that's a lot more than I thought. But my job, I can't predict. So I'm going, well, I can't take shorts now. But I have a target there. And I have another target here. So this is where I'm trying to go. I'm going, all right, those are my targets. And I'm sticking to it until it changes. What else? What can you do? Let's watch. So on the longs, having a wonderful time. Going, gee, I really didn't get that. Looking for selling, I guess we'll forget about that idea. Now watch. It's going to change. Now nobody knows until hindsight. I wish I had the ability to predict. And I learned a long time ago, no. So, next target. And all I do is I take targets sequentially. That's all I do. I don't know anything more. Let's look a little bit further here. Now, we have a couple structured trades coming up. Now, the VPOC migration are longs in TraderLab, but they're very aggressive, and a lot of traders have problems with this because they don't understand where it's qualified. So there's nothing mechanical, and that's why I always say, I can show you ideas, but it's not plug and play. The fact that the market does this is contextually based because we gapped. If we were inside of the previous day, it would not necessarily be qualified. So that's where something called context comes in. And you can learn about this in TraderLab because every day is different. And it changes. This is the other thrill for us. It's random. So how do we recognize change? Well, we have to define change. So we're going to talk about that right now. Now, and nobody knows the change until after the fact. So don't think about it. Don't go, gee, I should have known. You know what? If you had a crystal ball, then you should have used it. If you don't have one, then you're like the rest of us. Hindsight's 20/20. Nobody's clairvoyant. But in TraderLab, you would understand the trend is up and you would not be taking shorts. You would be taking continuation longs. Now, let me show you something. So what do we know? This now is the new retail price. Buyers are here. I know I got my icebergs. Who knows? Now, I'm going to show you, and this is sort of an advanced concept here. Let me just mark this thing because it's going to probably move. I don't know. And I'm going to show you now another structured trade. Now, for some traders, this might be the first trade if they don't have a plan to get in, down below. And the trade is called VWAP to VPOC. And what it is, if you're in an uptrend, now here's an issue right here. This. Now, I have no way of knowing, of course, that this will be the high of the day. Not blessed with clairvoyance. But what I know here is my sellers took control here. Now, right now, I'm looking at this and I'm thinking, well, we had absorption up here, so that's my sellers. I get a sweep here, and my resistance now is where the buyers were, which was right here, here. How do I know that, you're asking? I see the sell delta, sell stops. Now, I know this, but I don't know it's the high of the day, so I'm just seeing a rotation setup. When I break below the buyers, and this is absorption, why, when you get delta, the market goes higher? You know why? Because when you see the red bubble and it doesn't go down, it's showing you the absorption. Who's doing the absorption? The icebergs, most likely. And then where were the sellers? They're up here. So if I get buyers here and I know my sellers are there, and I don't know that it's just not going to keep going, remember that, and I break low, now, what do I know? Sellers were here. Buyers were here. I'm going to draw a little box for you. Now, again, this is in hindsight. But the thing about it is, I'm drawing this so you can see it. I just want you to see structure because this is called structured trading, right? So this is not necessarily a trade. What it is structure. So if I'm looking at structure, and let's look at this. So this is a micro auction. I call it a fractal, and that's actually what it is. Sellers, buyers, and the high volume is here. Think of this like a store. This is your Saturday night pint of ice cream before the movie. The store that's convenient. They call them convenience stores, but you pay for the convenience. Too high, too low, retail. If the pint of ice cream in this store or your mustard for the hot dogs is too expensive, you're going to leave it. Now let's go into the next fractal, higher time frame, RTH. For the full day so far, this is the highest volume. So thinking in multiple time frames or fractals, this is the retail price here. And for the whole day so far, this is the retail price. They're the same, except this is representing all the volume for the day. The highest is there, and this is representing all the volume in this fractal. I hope it makes sense. Now, what does it tell me? Well, it tells me this is resistance. That's what it tells me. And as far as I'm concerned, going to the moon. But now, where's my next trade? Now, I'm giving you all this information because this is part of a trade plan, not predictive. Where's my resistance? You see, it's here. I get a buy sweep. A buy sweep, in fact, let me show you just a little something here, and I'll be right back to this. Sell sweep, potential counter rotation, resistance, break low, too high. Sell sweep, potential counter rotation, potentially too high. Break, absorption, rotation. Where's my resistance? It's here and there. Sweep, of the opposite side. What does that suggest? Counter rotation. Now watch. The structured trade is called VWAP to VPOC. And here's what this thing is all about. When you're in an uptrend, and this might be too much minutia for you, let me know. There's a couple ways to participate in it. If we, and this is trendy looking, right? Hey, we're going to the moon. Okay. And we have a target above. So we got this and we got another target. Remember, if we pull outside, and this is called the low volume node, it's where, think of this as the same as this, too high, too low. Now, if we go up in quote time frame, too high, too low, same. Notice the low volume there. Let me just draw this out, because once you see this, you're going to start separating yourself from other retail traders. Your viewpoint and your understanding of market mechanics you might have a different viewpoint, or at least be curious. If that's too high and that's resistance, I rotate. Where's my outside edge? It's here. It's called a low volume node, and it could be there too. What do I have? I have liquidity now in the book. Let's start putting some pieces together. So let's just look at what happens here. Now, I'm looking for a long from VWAP to there. That's and out the top. Okay? That's the structured trade. I'm putting all the pieces together for you so you can see it. Now, watch. Right here, outside edge. Remember, it's there, it's here, okay? But my trade is VWAP to VPOC. Now, what do we know? We know retail trader behavior. Think like a retail trader. Just don't act like one. Anticipate to participate, but don't do what they do. Every time you have, how many times have you front run the VWAP only to have it take out the stops and then the actual trade? So subject to you vetting a plan, there's a couple ways you could do this. If you buy this thing, you're going to scale here. Where does your stop need to go? Under here. This. Resting liquidity. Why? Because if this is here, then the possibility is, and this is, I covered this in yesterday's special webinar that was exclusively in Discord. It might be eventually available to everyone, but right now it isn't. Front running might come in. So when everybody can see this who has an order flow tool, but understanding how to use order flow is another animal, and you got to learn it. It's not mechanical. What happens? Absorption. What is going on here? When you see, remember, you see the sell delta, and look what else you have here. Liquidity. So we come into the liquidity, the icebergs are buying, and right here, and we got our stops coming out, which are, hold on, has this ever been you? 81, 222, all coming out right here. 300 stops. And what's taking the other side? Remember, icebergs. They need the liquidity. They want that inventory so they can absorb it. Okay? So they're passive. They're absorbing the market orders. Those market orders, sellers need buyers, right? Passive limits. So then what? This is the long. This is a trigger. Now, remember, if you bought it over here, you got to scale ahead of this. If you bought it here, which is preferable, but it's up to you. You can do anything you want. Then you're trying to go here. Now we get something called VPOC migration. This is the first little chink in the armor. I'm going, uh-oh. And what I'm doing is, then why? What is the market saying? Maybe that's too high. So now, if you bought it here and you're looking for this and then out the top, things get a little wobbly. So let's watch. Scale. This is a variable high volume node. This is the new retail price. The market might say this is too high. I don't know. Do you? I don't know. So anyway, that was a long. Let's watch. Uh-oh. Out. Now what? Well, now what do I know? This is too high. This is what? Too high. New retail price. And as they say, thanks for playing. And this is when we all get a coupon to the buffet. Right here. So now we break under here. We get under here, which was too low. Trouble. Big trouble. So now, let me show you some ideas. This was support, right? This was resistance. And now we're doing what's called mean reversion. So these are your longs, okay? So look for the continuation trade to get to this. So this was the targeting for the long after scaling. And if you're in TraderLab, you would know and have this is a structured trade, and you would scratch this trade. To me, that's a success. Any trade you put on, you're always taking risk, and it's always random, you know? But if you vet it, then you know. So this here, right here, I'm going to throw a little line in here for you. This was too low. If I break it, so when I come down here, right here, let me show you a short. Now, this is advanced, and I'm not saying anybody ought to do this. I'm just giving you some sense of possibilities. We come through this liquidity. I get a sweep. I'm now under this. I'm outside. Let me take you a little further. I'm outside of this distribution. Let me explain what we're doing. This is called, again, a low volume node. It's going to mark it so you can see how this fits. And remember the idea of a long. Let me just look here. Yeah, this is still working pretty good. The short. Okay. So right here, I break down. Now, what were we trying to do? This is a distribution in the RTH. Now, when I take you into microstructure, I'm doing the same thing, but in a fractal. So, you know, what are fractals? They're little auctions, distributions. Too high, too low. Too high, I'm out of here. Too low, mean reversion. Oh, too high, too high. See you later. Thanks for playing, Tom. Get that coupon. So when I come out here and I break away from this, we are rejecting this. All of a sudden, what's happened is we're not paying that, and now we're coming back the other way. And now I can sell against this. And I can also work against. So once I fall out, now I'm off longs. And of course, I'm going, what's going on? You know, right? So now I break. Let me show you. I break right here. So I'm under the low volume node right here. I get a sweep here. I get a sweep here, and I'm thinking, well, maybe we'll come back across. I don't get that. Instead, I get a trigger here. So right when this is happening, because we fall out of this upper distribution, then I'm looking at coming back across and maybe filling the gap and getting here. What was the statistic? I got to bring you back to statistics. This is one of the things, and you have to vet everything for yourself. So we opened higher outside a range. There's about an 80%-ish probability of getting here and also filling the gap, all that kind of thing, right? So notice, so if you took a short here, for me, I was looking for the gap and then find buyers. Because if we fill the gap, we could come back, right? So right here, I see a sell sweep. I have this liquidity come in here, 1,200 stops coming out. Wow, they get coupon to the buffet and a dozen roses from their broker. Absorption. So right here, this is a scale. Now, when this happens right here, I'm perplexed again because I know I can now come all the way back. But I also know, let's talk, what else do we know? Too high. And now I've fallen out of this and I'm under this one. What is that again, you ask? It's another low volume node. So it becomes potentially an outside edge. Same as above. I'm repeating a process sequentially. I don't know what's going to happen. I'm like you. I'm clueless. Not ignorant, but definitely clueless. So I fill, right here, because of this liquidity, I put my order here. Why? There might be a reaction. Or they could pull and nothing happens. It's part of the thrill. So let's see what happens. What percent probability to get to 8? About 80%. So next target. Now, this becomes important because if this is the retail price from the ETH, and let's think about a concept of the shopping experience. We went up, we found too high. This is our next level of potential support. If this is still too low, then and we got into the range, we can come back outside again. We also have another trade here, which I forgot to mention. At 9:30 Central Time, we have something called the IB continuation trade. This is a structured trade. Forgot all about it. So there are, as you know, other trades in here that I'm showing you, but I want to show you this one. This is a structured trade, and you can learn this. So what do we know? We broke out of this distribution, low volume node. This is the first hour's low. It's called the initial balance. And just for your excitement, the probability of taking out either the first hour's high or low is almost 98%-ish. And again, you got to vet that. Once I'm coming down, this is a target, that's a target. So over 90% to get here, 80-ish% to get there. I'm in on this. What do you think? And the market's long, which means there's sell stops under here. Everybody's running for the exit, right? So this is the next structured trade. So I'm under here, and I'm looking for it, fill the gap, and then if I come back and I can't get, and this is where my risk is, out here, okay? So if any trade I put on here this is a short, by the way. Now I took this one, and I'm trying to come the next. First of all, I get risk neutral, and the ETH mid. I know you didn't write this one down unless you've been here previously. Has a 68% probability, so that's very exciting. And then down below. So this trade is short here. You can have the stop up here or above this. I kind of stay outside further, but that's just me. I'm not saying that's a good idea. You have to find what works for you. And I trade the targets. I don't know anything. I'm truly blissfully ignorant because I know I can't know. Now, where I'm trying to go is here. Why? Yesterday's retail price is here. So it's an objective. And the micro composite volume point of control is here. That's the intermediate time frame. And there's one other level I have to give you that's not on this chart. 6276. Now this will blow your mind. Now the thing about trading is sometimes it seems so structured and so organized, and other times it's chaos. And that's because it's random. This is a low volume node from the ETH. The ETH, we had a double distribution, I think, in there. I don't have it right in front of me at the moment. And we had separation, or a low volume node. Remember, on the top was a single. That is also like a low volume node. This is a low volume node. That is a low volume node. I better put something on here so I don't forget. And in the ETH, that's a low volume node. So this is a target possibly, but this is my primary target. And it doesn't mean it'll ever get there. You know, it's just part of the joy. I think I'm going to be caught up pretty soon. And we can get into real time. So resistance, low volume node, outside edge, break low. Notice the liquidity. By the way, this short right here, I think I mentioned, I narrated this in TraderLab. Now, I don't call trades. I'm an educator. You don't need to take my stops. We all, you know, either, as they say, you fall on your own sword. This sweep says counter rotation down, just showing you down, 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 down. Having a wonderful time. This is the next level, and then down here. These are the targets. Now, counter rotate. What do I know? I'm outside of the range. I'm rejecting the prices above. I know this was the retail price from the ETH. I know this in the ETH was one of those. So it's important. And if I get below it, I got this. That's all I know. Now, let me talk to you about this trade right here. Now, this is a little more advanced. You can learn this, but you don't start with this. Otherwise, you will hurt yourself. What I always tell traders, and you know, everybody, by the way, when someone says to you, here's just something, I want you to ask yourself what you would do. This is going to tell you something about yourself and the issues. If someone said to you, if you want to learn how to trade, the first thing to do is to learn one structured trade. And let's say you have a warehouse of maybe 10 trades or 15 that you would learn potentially in TraderLab. And someone said, just one, and make it your buddy, that when it shows up, you are waiting for it, you anticipate it, but you have to master one. Would you do it? Now, be honest with yourself. Or if you saw all the shiny setups and structured trades, and you see other traders taking those trades and being profitable, would you do 2 or 3? Or would you have the discipline to do 1? Now, you got to be honest. Because why? What is your motivation? Isn't it the trade? Well, what is that? That's FOMO. Because you're going to believe that, oh, I can do more than 1. But that belief is being generated from a different place in your brain. It's FOMO. And if you don't have the discipline to learn 1 and be able to teach it to me or another trader who understands it, then you probably, and I say probably is the term for probability, is you will not be in the business. Because discipline starts the first moment. And if you don't understand why you don't have discipline, you need to learn about it. It's much deeper than you think. Notice this liquidity up here. So I'm looking at this, and I post on TraderLab. Keep an eye on 90, I think. Should be in the chat. And then it drops down. When I see this, this becomes a short. Now, this is something nobody knows. This is resistance. This is where the short was, right? So I see this, and I'm going, well, and I got this coming in on top. I'm liking this. This drops right here. Buyers are here. Sellers are there. There's the iceberg, break, and the entry is there. Okay? This is a trigger, and that's a structured trade. Advanced methodology. What am I leaning against? The ETH volume point of control. Isn't that the same as a VHVN? Aren't they the same? Except fractal. Do you see how I'm kind of doing this? Well, if I know this is the retail price from the ETH, fair price, and I break below it, and this is, I know, is important also, and I come back to the outside edge, right, which is there, and this retail price, and I get this jump in here, and I get a trigger. Now, I don't know, I'm sitting here with you, my teeth chatter, trigger, test. Let me draw a little box around this thing. I want you to see the microstructure. So what I'm doing is I'm doing the same thing, but I'm doing it in multiple time frames as you think about it. But in the auction, it's not, in the RTH at least, it develops, there's no time to this. It's what does it take? How long does it take for these participants to go, nah, we're not paying that. We leave the store, we retrace and test. The sellers that were here and there, it comes back and they go, oh, really? Here, have some more. Too high. Where am I trying to go? Here. And there, okay? Where do I go? There. Who knew, right? Squeeze. Now, this I haven't seen, but let's look. VPOC migration. Huh. And what is this? A sweep. What is a sweep set for us? Sellers. Now, it's not a trade, unless you have an edge there. I don't. If you have one, you let me know. But where am I? I'm below the IB. I squeezed out, okay? So this was my short, right? I'm going to take you a little further now. I don't like getting advanced. I like to keep this kind of simple, but I'm going to show you a little something to think about. Chop, 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 break low, resistance. Target, who knew? Clueless. Break high, pull back. What might be support? Now let's go from the other side. VPOC migration. In the developing time frame for the whole day, this is now the retail price. In the microstructure, this is the retail price. So it's too low. Here, clueless. I noticed this coming in the book. No clue. Clueless. Break low. What is support? It's here. This comes down. This becomes resistance. Let's watch the behavior. I'm trading multiple time frames as you think about it. Oh, there you go. What is this? Potential short. That's all I can tell you. What do? You want to get risk neutral. This is not a trade recommendation. This thing is history. My low volume is out there, and this is where my target was coming down, but this is the ultimate target. Doesn't mean it'll ever get there. This is trading. I'm in real time now, and if you have questions, I'll look up. Apologies, I have not been able to look up, when I'm doing this, I can't see the chats. One moment, please. One moment. Got a little trouble here. Hold on, guys. I'm having a little trouble. One moment. I feel like having a little technical thing going on. Hold on, guys. Are you guys having a problem in YouTube? Anyway, this is a potential short. Let me, and it's not a trade recommendation. Let me try to fix some levels over here. I'm just got to switch some stuff on, Let me see if it's correct. One moment. I'm exporting levels from Investor RT, which is by higher time frame software, and it exports here. So what's going to happen here is you're going to see something, HVNs, high volume nodes, and you're going to see low volume nodes in here. So might see it here or maybe up there, I don't know, but you're going to see a high volume node. This is the volume point of control. This is the retail price. So now we have found Everything above is too high. Now, the thing this can do is it can rotate here. So if you took a short here, this is a VPOC migration structured trade. You had a sweep here, sets up the counter rotation. You come back. We know this might be too high right here. Nothing to do. VPOC migration, this sets up a short. You have to get risk neutral. It is very easy to get squeezed here. And if you do, you either take a stop or you scratch. It's all subject to your plan. I mean, you got 5 points here. If you have discipline and you enter following a trade plan, you have room. Because roughly it's a 3-point risk, more or less, in TraderLab. Less if you have better, discipline and you're patient. A lot of us are not patient. It's just part of the wiring. We don't want to miss it. That's FOMO, and it's really difficult to control the emotional state. It really is. And you're not the only one. We all feel it. Over time, the thing is, as you progress in your development, you can learn this in TraderLab, the thing is, if you keep statistics, which is really nobody wants to do it, work, it's not the fun part, right? What's fun? Knowing where your trade is before the market gets there, having a structured trigger that you have vetted so you can read the behavior. And let's just say the buyers were there, the sellers are there, there's the sweep. I'm just showing you. See the change in behavior right here? Sellers. Well, where were the buyers? They were there. Where do we come back? Now, this is just nothing. This is just structure, right? You need alignment. But that would be a short if it had alignment with location. This is like out in space. But notice what you get. I'm going to take you into micro. Buyers were here. Sellers get below. Trigger. The buyers were here. They come back. That's a short. Let's come into microstructure here. Sellers are here. Sellers are there, there, there. Sellers are here. Buyers are there. Okay? I get below. It's another micro trigger. The micro high volume is right there. Resistance. Trigger. Where's the volume now? There. Short. So, I'm just showing you triggers. And what I would suggest in TraderLab, these happen all over the place. You can't trade these unless, of course, you really develop a superior understanding. And what does it take, by the way? This is not a 6-month process to learn trading, guys. Linda Bradford Raschke, who started around the same time I did. I think she started in 1981, and she was down on the floor. Options, I think it was in Philadelphia. I don't remember. And but she's was in Market Wizards, and she talks about, she was asked how long does it take. She says 10 years. Now, if somebody told me it was going to take me 10 years to become proficient at this, I don't know if I ever would have started. But nobody told me anything, because there wasn't anybody doing off-floor trading at the time, because there was no technology to do it. So I was sitting, and we didn't have real time. We didn't have PCs, so it was all very difficult. So it was bar charts, drawing trend lines, that kind of stuff. So that's where I started, and she started the same way. So, and she hasn't changed a lot what she does. Very interesting. But the thing about it is, over time, you become proficient. You have to start at a place to develop the discipline and the process of learning how to trade. And learning how to trade is really about mastering yourself. I believe anyone who comes to TraderLab can learn how to trade. But I will say many traders, no matter where they go, are not willing to do the work. The work it's called work because it's not fun. It can take a long time to develop an edge, because you don't really know where your edge is. It's not going to be my edge. Now, I've shared 60 PDFs of structured trades. that you can take them and it'll save you potentially years of searching. I've already given you the trades. The thing about them is they're not plug and play. And yet most developing retail traders are used to the idea of just copying something and then start trading it without doing the work. If you want to find out about those results from doing that, come to TraderLab and you'll find out. There's traders in TraderLab who will not do the work. They don't have the self-discipline. They are actually captured by FOMO, and they don't even understand that they are choosing to fail. They have compulsion to trade, the dopamine fix, the cortisol, the fight and flight thing. If you don't learn about the obstacles that are inherent to our primal wiring, you'll be making choices that are not in your best interest, and you will not understand why. Do you want to understand yourself? The business of trading is going to put you in a place that you've never been before. It's going to put you in a place of randomness with emotional triggers. It's going to challenge you beyond anything you've ever done in your life. And we probably all had significant challenges. But most of the things that challenge us in life, we're wired to experience because it's kind of how we developed and, evolved outside. In trading, it is not what we experience outside. It's a unique environment, but we bring our socialization, approval, Imagine trying to talk to your family about this. They think it's gambling. Well, it is, except we're in a casino and we can choose which side of the table to sit on. We can be the gamblers, which most of us are, as we develop, or we can be the minority that sits on the house side of the table that only plays games with an edge. Casinos give you the cocktails, the ticket to the buffet, and maybe even tickets to Adele, comp your room and everything else, and they still make a heck of a profit. Why is that? Well, that's a successful business model, and why can't we do the same thing if we're in a random environment like they are? I've always asked myself this question. Why do I keep waking up in the same place? I'm working really hard. I'm getting winning trades. Why can't I get more of them? Well, sometimes I do, sometimes I don't. That was the question I asked myself after years. Because no matter what I did, I always had what I call Trader Groundhog Day. So I stopped and I said, okay, I am not understanding something. All my buddies were floor traders. There were not that I knew, but very few off-floor traders. We didn't have the technology. So it was very difficult. And no information, no internet, nada. You either bought a book, and I'm sure you guys have all read books. What has that done for you? Or you went to some ridiculous, expensive seminar with the idea that, I'm going to learn something. Then you walk away with something that you throw in the garbage. I don't know if you've ever done that. You guys do it differently now. You can do it virtually. You join chat rooms and you pay whatever it is. And how's that working out for you? I'm just saying. And the reason these things typically don't work, now I'm sure there's some value, of course, is because you can't replicate it. It doesn't fit you. You're trying to walk in somebody else's shoes. TraderLab is about helping you understand the business and developing the business plan. What is a business plan? It's knowing the possibilities, defining change, knowing where your trades might show up, having triggering structures, knowing risk management, and understanding statistical probabilities. And who knows, right? Anyway, this is the last structured short, not a recommendation, right? We're in real time now. Now I'm going to look up at your questions. Thanks for your patience. I have to kind of give you my time is very limited. TraderLab, of course, is available to all of you. There's no cost for it. I have to remind you guys that I'm a full-time trader and I carved this time out, but I also don't take trades. Yeah, T46, it just posted. It takes a lot of screen time to gain the confidence to hold on to trades without messing with them or moving stops. You know what? We are risk adverse. That's part of this fight and flight thing. We're going to go out in the jungle there and try to avoid the saber-toothed tiger. When the market counter rotates, What is your impulse? Remember, this is wired. Oh, I'm going to bail out. Well, how many times have you been in a trade, gotten out there, and then have it go to target? And of course, it can take you out. But where does the trade fail? It doesn't fail here. It fails out here. Where's the stops? Right here is my resistance. Am I going to put my stop here? No. I'm going to put it further away. I want the market to have to reach up. And I know it can come up here because where's my resistance? Wasn't it there? Let me draw a little box for you, by the way. Just going to show you. Oh, wrong computer. Let me try a different computer here. I'm putting a box on my trading workstation. That's not going to help you, is it? This is what I do for myself when I have what I perceive to be important levels. Otherwise, they go off the screen and I, kind of forget what's going on. So, now this thing, no more, right? This can go. Let's get that out of here. I'm now working this. This is mean reversion. This is rotations right now. So for this to work, we're trying to go here. And it can certainly squeeze. Now, we have a big bond auction coming up at 12 noon my time, 15 minutes approximately. It's the big kahuna. And there has not been good demand for U.S. debt. POTUS wants interest rates more or less, I guess, close to zero or wherever. If you were going to buy debt denominated in U.S. dollars, just think about it, and you know that based on what POTUS says, that he wants to replace Jerome Powell with somebody who, let's just say, is a little more flexible. What does that do to the value of the currency that you're holding if you buy a U.S. bond? Doesn't that make it worth less? Creates inflation, devaluation. So if you buy U.S. debt, are you going to buy it at the current interest rate? Is there going to be a lot of demand, or do you think you don't want to buy it because you're going to build in a loss in currency side? So the rate side needs to go up. Now, POTUS wants rates to go down. But how does that impact long-term debt with our deficit? I'm just asking the question. Noon, we're going to have this auction. And Wednesday's auction, not to mention we're going to have FOMC minutes at 1 p. Central Time, which adds a little juice, if you will, in the whole thing. That could be a substantial mover. So it's just information. It's not a recommendation. So maybe the market's anticipating. Now, here's a little thought for you. I got to say this. The market goes up to go down. The market goes down to go up. Why does it do that? In all fractals and time frames. The market is short. What did we do today? We went up. What happened? We got buyers, longs. What happened to the shorts? Did you see the stretchers carrying them out? Then what happened to the longs? It's their turn. So now what? You see, are we going to come here? Or are we just going to rotate and squeeze these guys and then we go into park until the auction? I'm asking the questions and I don't have the answers. I don't think you do either. So if you know you don't know, the only way to operate in this is knowing you don't know. And that is following a vetted trade plan, accepting you're in an environment that's 100% random, 100% of the time. The casinos are an environment of 100% randomness, 100% of the time. The only difference is, and it's the same for us, they only play games with an edge. In the trading business, we only want to take trades that have an edge. And we're still going to pay the gamblers in spite of it. So do the casinos. But edge is what gives you the confidence. Do not bail out when you get a counter rotation. Years ago, many years ago now, I created something called an error cost calculator. When I bail out of a trade, skip a trade, move my stop. Sometimes it wasn't even conscious. It was the lunatic, the emotional triggers that I was responding to. It wasn't even conscious. I would do something, but loss of focus. And I put a spreadsheet together, and I, saw repetitive behavior, errors on my part, whatever. We're all the same. We all do the same stuff. And I quantified it. And I wrote a check out for that amount, and I put it on my monitor. It really helped, because instead of ignoring it and going on to the next trade or making a little note in my journal and never looking at it again, I put it on a spreadsheet. I found out that I was throwing $5,000 a week out the window. Add that up, $7,000, $10,000 a month. And all of a sudden you get real motivated. So I put that check on my monitor. And what it showed me was I was the one who was responsible, of course, and I kept it in front of me so I would not forget and get my OPIC. It made a big difference for me. These are some of the things we discuss in TraderLab. So these are just pieces. There is no right way to trade, but I think if you can reduce what might not be the right way to trade specifically for you, and find where your groove is, you might be able to improve your results. And it is not a plug and play. The journey of becoming independent in this business and sustainable is like learning to be an athlete. I'm not saying Michael Jordan, but I'm saying somebody who was at a very, the top couple percentile of anything, whether it's an attorney, physician, any high tier thing, musician, dancer. This is the language. So you got to learn the language, and then you got to find your rhythm with it. My rhythm is not to try to trade something like this. My rhythm is to try to actually this one is because it's a structured trade, but I'm not trading for that. I'm trading to get risk neutral. And then if it comes across, it'll take me out, and I'm perfectly okay. Then I'm going to look further outside and to come back here. So for me, I only have shorts, not a recommendation. This is called reversion trading. So what this is outside in, outside. So it's back here, out. If we don't get going, then it'll revert and come across, squeeze these guys out, and then I have to look outside again to get short to come back here. It's rotational trading. It's a specific plan in a plan. So for me at the moment, and these aren't recommendations, it's shorts going here. Will it get there? No clue. It might do it, the bond auction or Fed minutes, or it may never do it. I have no idea about that. So I don't try to, I can't, saying it will do something doesn't belong here. Saying it might do something is the best you got. So the best you have in this is maybe. Maybe it'll do this. Maybe it'll do that. Maybe when I take a trade, I'll take a stop. Maybe I'll get risk neutral and get taken out and scratch. Or maybe I'll get risk neutral and then my trade management process kicks in and it gets the target. Or I get taken out on a trailing stop. Maybe. That's all I got in this business. That's it. I don't need anything more. And the reason is I can't have anything more. I hope that makes some sense. You guys got some questions? Let me see. Yeah, guys, if you have questions and you're visiting in YouTube, there is a link down there if you want to visit the Bookmap Discord TraderLab community. There's no cost for it. Nobody's going to bug you. You're not going to be solicited. It just doesn't work that way. It's an educational portal, really, and it covers a lot of topics: stocks, options, crypto, order flow with a high-tier tool like Bookmap. What I do: auction market theory, volume profile, structured trading, trade plans, the business of trading. So most of us come into this, and it's kind of like a video game because we just don't know the business we're trying to be in. Nobody tells us. Maybe but I certainly didn't know, and most traders I come across just don't know. because they're all busy with influencers and chat rooms, and that's all fine. You know, I don't make any judgment what anybody does. What I have found is if something doesn't work, don't keep doing it. This is the Bookmap TraderLab. It's open again to all of you guys. A lot goes on in here. Thanks for posting this, Ned. So you can see there's a lot here. Now, why TraderLab? What makes TraderLab different? The range of experience in here is across the full thing. In other words, it's new developing traders, and it doesn't matter how long you've been trading, and then old dogs. And I think I qualify as an old dog, 46 years. And this is what I do. And previously, you know, I've sat on trade desks. I've trained traders over the years. And you might consider this almost like a virtual trade desk, except you're responsible for the outcome. Many traders who want to be traders really will not succeed because they're not really willing to do the work. Instead, they hop. Now, here's a trader who posted, he was on the short side, I think, and he's in TraderLab. Now, he's been trading a while, you know, and this doesn't mean this will happen for anybody, but there's some stuff going on here, right? Anyway, that's TraderLab. So it's a community. Everybody's working together here, you know? And there's a library of webinars. And Ned, thanks for putting this together and curating it for us. The primer webinar has about 33,000 views. It is give you an overview of the business that you're trying to be in. Meet the TraderLab. This is advanced trading methodology. Now, I have to differentiate the term advanced with complicated. This is actually simple. What is difficult for us is randomness. So you got to separate complicated from randomness. Trading is not complicated, it's random. So that's the whole thing. I mean, the dealer deals the cards in the casino. It's not complicated if there's an edge to the game they play. It is random. Same. So emotionally, we're attached to outcomes. We are dealing with FOMO, the need to be right, the fear of loss. I don't think the dealer is really concerned about any of that because their job is to deal the cards. Our job as traders is to know where our edge is and only interact when we have an edge. And we are still going to pay the gamblers. Seems to work okay for the casinos, and they are detached from the outcome. We are not. Here's another one for you. Stop gambling and start winning. And then there's a whole library of these things. And then there's settings in Bookmap. The structured trades I share, 60 PDFs that you can take and get ideas and reverse engineer. And I've got about 600 streams out there, 650, I guess, floating around. A lot of different topics. But in the end, no matter what, it's up to you to choose how you want to approach this. Remember where our sellers were. Doesn't mean this is a short. It just means that's where our sellers were. That's why I draw these little boxes. And I also know in here is micro high volume. I could show it to you, but I don't want to mess the chart up. And with Bookmap, you can really open this thing up and get into minutia. That's one of the beauties of this. What do you want to see? Can you see this right here? Can you see this is absorbed? These are buy stops. I call this stop divergence, higher price. This is micro, so there's nothing to do here. Sellers are here. The buyers were there. Why didn't the market go up? How about the sellers? Pressure. This liquidity drops down. Notice how it might impact. Now, if they pull here and they don't come back in, they open the hatch. This is algorithmic behavior. Now, it doesn't mean you sell it, but you can learn to read it. It's a language. Where's my resistance? There's stops right here, too. So let's just see what it does. Let's come back. Let's watch. Not a trade recommendation. We're just hanging out. We're visiting. We're having a virtual coffee together. And what is the condition of the market? Let's go back. I know you were paying attention, and it's random. What is the condition of the market? Mean reversion. Mean reversion. This is a context inside a context. Now, the problem, of course, is where's the outside? And that is what's difficult for mean reversion. Because you can find yourself selling this, getting stopped, selling this, getting stopped. So the idea of mean reversion is to look out towards these outside edges. And it can happen anywhere. This is the full session VWAP. We have regular VWAP, and we have liquidity. Any of these can be shorts, but this is where you're trying to go. Okay? So you can watch this. You guys have questions, by the way? How are we doing? Is this making some sense? By the way, if you're interested, now you notice the location. You notice the absorption. Now, the idea of this, and this is more structural, it's up to you if you want to, I mean, it's only, by the time you get 90 to 88, it's not necessarily a trade because it has to qualify based on range. The thing about the auction is it doesn't care about the range. We do for risk reward, but you can learn to understand market mechanics because this is where the market might go. This is called mean reversion. Now in the TraderLab, this trade, if there was 10 points or 20 points or whatever, just saying, it mechanically, if you will, auction process works the same. So the range is what we need for risk reward ratio. The auction just does its thing. What's too high? What's retail? What's too low? Too low, retail, too high, potentially to come back here, or keep going. Part of the thrill, right? Mean reversion is a specialty. It's its own plan inside a plan. So if we think currently the long side has failed, then it's shorts unless it changes again. So it'd be trying to get short to come here and then to go to our potential targets below. And you can make a note of this, then you see what happens. They're definitely not trade recommendations. Now, I need to remind you guys, first of all, there's a link in the bottom of YouTube if you want to visit TraderLab. There's no cost for it, and I have to bring it up because you might forget. Also, Bookmap is having a 4th of July sale. 50% off, something you might want to think about. If you want to try Bookmap, go to bookmap.com. Save dough. Nothing wrong with that. I'm a big fan of saving dollars. And that 50% is pretty significant. You can do that. Go to bookmap.com and you can see the different configurations that are available in the sale. Okay. Read up on it. Remember, Bookmap has tremendous education, stocks, options, crypto, order flow, of course, and a lot more. And this is what the 60 PDFs look like. If you haven't taken, these are actual trades, and some of them are just screenshots. They are not mechanical. I'm always going to say that because in spite of what I say, many traders just are in such a hurry and they don't understand FOMO and how that and the choices they make may contribute to their lack of sustainability. Please give a like on the way out. I appreciate you coming by to TraderLab today. Remember, we have the bond auction. Look for a reaction, 12 noon Central Time. It's happening right now. And then we have FOMC. Don't forget the like on the way out. Look forward to seeing you soon.